With just under 3 months to go until the end of 2016, what factors will dominate the stock market? Is it the Fed, oil, the election? Well, Scott Meinert is back with us. He's the Global Chief Investment Officer of Guggenheim Partners. And Scott, it's so nice to see you again.
Oh, it's great to be here, Scott.
So of the factors I just mentioned, what do you think will be the most important one for the stock market in the near term?
Well, right now, the election is front and center, right? If we get a Clinton victory without a majority of Congress, I think we're going to get a stock market rally. If we get a Trump victory with a Democratic Senate, I think we'll get a stock market rally. And so, I think we're pretty much set up for the near term. This is a seasonally difficult time for stocks. The fact that we haven't been able to really beat stocks down right now in September and October, I think is telling me there's some strength underlying this. And once we get the election behind us and the uncertainty out of the way, I think, 5 to 10% before the end of the year.
All right, and we'll talk about your outlook for the markets in a moment, but on the Federal Reserve front, are you expecting a December rate hike?
Yeah, I am. I think the Fed, has basically taken this slow go on rate increases. Obviously, the pressure is mounting on them that they have to raise rates because it's becoming politically unpopular, even within their group themselves. And so I think there will be a rate increase, even just as an accommodation for the dissenters within the Fed. And the only thing that I think would stop that is if we had some sort of crisis in the fourth quarter, which I don't see on the horizon.
Well, and could that be a surprise Trump victory in November? Could that derail a December rate hike forecast?
I don't think so. But I think what could derail a rate hike would be if Trump won and we got a Republican Congress and Senate, or if Clinton won and we got a Democratic Congress and Senate. So, I think divided government is what the market is counting on. And if they don't have a divided government, I think that the policies, especially the Clinton policies, could be perceived as bad for the markets.
All right, and just from where you stand right now, we're at about 2130 in the S&P 500.
Right.
Year end, where do you see that going?
Well, I think, if we're 5% higher from there, it would be reasonable to say maybe 2250, maybe even higher.
So you're not worried about, valuations right now?
No, not at all. When you look at the Fed model, we have room for multiple expansion at this point still, and earnings are turning a corner. Now that we've gotten all the negative surprises out of the energy sector,
right.
We're starting to see energy earnings stabilize, and as they improve, we're going to see earnings rise.
All right, now on that note, given all these risks or wild cards or whatever you want to call it, where are you investing right now?
Well, the emerging markets are very attractive. We've been invested in Chile and Brazil. Those are very interesting places. High yield has been a real winner for us. It's outperformed the stock market. And, going forward in a period when the Fed is raising rates, historically bank loans have been shown to be, very attractive options. And we have a bank loan fund, the Guggenheim floating rate fund, which investors can buy.
Now, you mentioned Brazil earlier this year. You were pretty fond of Brazil, and I want to show a chart of the MSCI Brazil Index. This is ticker EWZ. It tracks Brazilian equities. It's up about 70% so far this year, so what a call that was. Are you still bullish on it?
I am in the long run. Obviously, trees don't grow to the sky.
Sure.
So in the short run, I wouldn't be surprised for some consolidation, and we've gotten that over the last months. But longer term, I see Brazil starting to turn the corner, and as commodity prices start to rise, I think emerging markets will do well.
All right, Scott Meinert, we'll leave it there. From Guggenheim Partners, thank you so much for coming back with us.
Thank you, Scott.
I'm Scott Gamm, and you're watching The Street.